candlesticks work in no matter what market you're trading and no matter how you're trading. No matter whether you're trading real forex or in the live forex markets, whether you're trading cryptocurrencies, whether you're trading on the Chicago Board of Exchange, or you're trading CFD for copper, or you're trading copper at the London Metals Exchange. Now, candlesticks are a form of charting developed by Japanese rice traders in the 17th century. Now, keep in mind that candlesticks involve, there's three different parts of when we say the word candlesticks. There's candlesticks and candlestick patterns. There's candlestick charts. And there's also candlestick strategies. So let me pop up a chart here real quickly for you, a live chart. And come on, computer, let's pop it up on the screen. Okay. Now we're looking at the Euro US dollar live chart. This is my teaching chart. I'm not here to discuss the Euro US dollar or what's going to happen with the Euro US dollar. This is what I teach from in every class. Now, lots and lots of novice traders hear about candlesticks and they think the reds and greens are great things to look at. And they automatically react to the colors on a chart. And they say, I see lots of red, so I should be selling. Or you'll say, I see lots of green and I should be buying. Well, that's about as far from the fact and the truth that you can get. That green, sure, you got a rally, but by the time you see it all, it's too late to do anything about it. Here, yeah, you could have tried to find a way to get in here, but by the time you would have noticed this, that we had three candles, and these three candles are called, we have three black crows, three red soldiers. These are patterns. By the time you realize it, it's really too late to get in a trade. So when you're just looking for lots of red and green, you'll make mistakes. But candlestick charting, which is using candlesticks in your chart, is about the best charting mechanism you can find. And before we go on to pattern recognition and trading analysis and strategies, let's talk about candlestick charting. So when I started trading in the 1970s, yeah, it was that long ago, we didn't have computers. We didn't have online trading. We actually didn't have computerized charts. And we would sit in the pits looking at ticker tapes, doing our own charting. In those days, the most popular charts were called bar charts. Now, there's a more simplistic chart known as a line chart. But a line chart doesn't tell us much of anything. A line chart, you put one dot on the chart for each closing period, and you connect the dots together, and it gives you some general drift of the markets, but it doesn't really tell you much of anything. Now, a bar chart was, up until a few years ago, my favorite type of chart. Now, the reason I'm telling you this history, and especially when we start talking about the olden days, is important that you understand how we got to where we are today. Now, when we would sit there, and we would sit there with a notebook full of graph paper and all of our charts in there, and whether it's every half hour, now remember, the markets move slower, and we traded much, fewer assets. And we didn't really trade. We sat in the pits there. There was no online trading, so to speak. There was speculators, but they were actually buying and selling real contracts for pork bellies. And if you didn't find somebody to close your contract with, you were going to be responsible for paying for those pork bellies. Now, we would sit there and we would mark on our charts each time the prices would come through. And we would sit there and put the low on the chart, the high on the chart, the open and the close on the chart, and we'd form this bar. It was the fastest and easiest method of putting information on your chart. And basically what a bar chart is, it's a visual representation of price. And there were ways that we could see these patterns in the bars. Now, it's not as easy to see, as definitive as we saw these three red candles, these five red candles going down, or we saw these three green candles, but there were patterns and there were names for these patterns, but they weren't as visual. And it was with the beginning of online trading and computerized charts that traders started getting interested in candlesticks. Because they've been around, like I said, since the 17th century. It was the amount of time having to draw these on charts. Now, in the olden days, we would be sitting there in the pits drawing on the charts, and some people still use candlesticks. And we were all sitting there with our pencil and our graph paper, drawing these lines and putting these dots on the chart. So when we would have a negative or bearish period, in those days, we didn't have red and green because we didn't have magic markers. We were using Bliss Black #2 pencils. So if it was a bearish session, the price went down from the open to the close, we would use the side of the pencil and fill in the body of the candle. If it was a positive or bullish session, we would just leave the candlestick open. We just wouldn't fill it in with the side of the pencil. So we have black and white candles, so to speak. The reason I'm telling you this is a lot of patterns have been based on the old mechanism. So you'll hear about 3 white crows, 3 black soldiers. We could rename them, but you don't go back in history and just start calling something green soldiers and red crows. They're black and white. So it's important that when you start to learn patterns or you start reading something about a candlestick and they're talking about black and white candlesticks, that they today correlate to the reds and greens. And the fact is that it is unimportant which color you use. In other words, we could decide we want to use purple and yellow. Okay. So now we have purple and yellow candles. As long as you know which color is bullish and which color is bearish, it's perfectly fine. So if your favorite colors are chartreuse and pink, make them chartreuse and pink. There's some brands out there that when you go on their platform and use their charts on their platform, they have them as company colors. There's one that has blue and gold candles, and their company logo and their company colors are blue and gold. But it's not important as long as you know which one is which. Okay, so now we're back to red and green. Now, for you guys that are here and you're just starting to trade or just starting to use candlesticks, let me tell you what makes up the body of a candlestick. When the period opens, now we're looking at 1 hour candlesticks. Whether you're looking at a 1 hour, 1 day, 1 week candlestick, whenever that period begins, you would put a line at the open. At the end of that period, in this case, we're using a 1 hour period, the end of that 1 hour, you would put a dot at the high. At the end of that 1 hour, you'd put a dot at the low. At the close, you would put a line across and you would connect the open to the close and you would connect the high and the low. This forms what is known as the wicks or the shadows of the candles. And this is known as the body of the candle. If this was a bullish period, in other words, price moved up from the open to the close, we would fill this candle in with green. If price fell down from the open to the close, that would be a bearish period, and we would fill in that candle with red. So what does the red tell you when you see it quickly? It tells you that that session was bearish. What do the wicks tell you? Well, the wicks are sometimes more important than the actual body, because look at the length of these wicks here. These were long trading periods where price went up and price went down, price went up. And it happens to be that we might have a red or green candle here, but that's just the open and close of those few minutes at exactly 11 o'clock and 11:59:59. But look at how much that asset traded there. Then we also have the shape and the size of the body. As you can see, we have sometimes very long bodies of candles, sometimes very tiny bodies of candles. They tell us something about the session. Yeah, but ultimately, it's not about the reds and the greens. It's about the relationship of the previous candle and the current candle, or even a third candle, and its relationship to trend. This is important to us, where we have an open and a close, two candles the opposite color next to each other at the same level. Sometimes we have what we call indecision candles. Sometimes we have bearish or bullish engulfing candles. All of this means something to us. So first we learn to look at the price chart, and then we have to look and be able to understand what price is trying to tell us. So let's go back over to my PowerPoint and let's talk about some of these patterns. Okay, now if you look on your screen, you can see a little box that says Handouts. I've put together for you a handout. It's all the major patterns of the Japanese candlesticks. You can just click on the download button. There's no cost, there's no password, there's no nothing. And it's just I think a JPEG or a PNG, and download it to your computer and look at it later. It's for you to have. So remember, each candlestick represents a data set of the complete price action during the selected time frame. And we have the bodies, we have the wicks, we have the color of the candle. All of these go into making up information for you to make decisions. And we talked about what the size and the shape of the candle tell you. Now, before we're going to go over and start looking at single and multiple patterns. And this is where we start getting confusing, because pattern recognition is a lot of memorization. And for our type of trading, if you're trading CFDs in fast-paced markets, sometimes this pattern recognition doesn't help. Now today, because we have computerized charts, things have become a little bit easier. But whenever you're memorizing patterns, and each of these patterns comes with a set of rules of what you're supposed to do when you see it. Well, when you're trying to trade by a set of rules, you get blindsided because you get so wrapped up in what the rules are telling you that you don't see what's happening in front of your face. So there are a couple of patterns that can be very valuable and important, but most of these patterns won't help you in most of your trading. But on the other hand, because of the wonderfulness of computers, we can do things like, this is TradingView, but on every charting pattern system or any charts you're using, most of them will have, a way to set up your patterns. So here I can choose, and you can see I've chosen doji, bullish engulfing, bearish engulfing, and selected those as my favorite patterns. And all I'm simply doing is telling the computer, when this pattern develops on my screen, tell me. So in other words, as I click on my favorites, you can see on the screen now, you can see here the computer tell me, okay, we have a bearish engulfing, we have a bullish engulfing, we have a doji that formed, we have another doji. And if you want an explanation, just highlight it. But now you're seeing them without spending lots of time trying to see what's happening, and you're not getting involved in, there's actually close to 96 patterns. There's 32 patterns of the most primary patterns, and of those, there's 16 that are critically important. I only look for bullish engulfing, bearish engulfing, and I look now and then for dojis. But my doji has to form specific, because once you've seen the candlesticks on the chart, once you see patterns, you also have to be able to analyze them in relationship to the trend and support and resistance and where they sit on charts. Because your trading strategy is like when I teach my indecision trading strategy, has to do with an indecision candle, but that indecision candle must appear only at a certain point. And then you're combining together the interpretation and reading your chart and your price action, as well as reading what the candlesticks are trying to tell you instead of memorizing patterns. So if you want, click on the download that handout I gave you, and it's a cute little handout. It'll tell you everything you need to know about all this. So far we've talked about building a candlestick chart, understanding and reading candlesticks, the explanation of size and shape, the formation, and the position. We've mentioned doji. Harami I haven't gone into. Harami's just a cute little pattern. We'll take a look at it. We talked about the bulls and the bears, and we'll take a look at hammers and hanging men. But most of the important patterns are multi-candlestick patterns. Now, I told you, it's a lot more than just looking at reds and greens on the charts. Now, this little visual I didn't make up. I don't call them lonesome cowboys and two for tangos and three musketeers. Whoever did this was getting cutesy. But we do have one candle, two candle, and three candle. One candlestick patterns appear so often to your trading that they really don't help you with anything, except if you've incorporated into some trading strategy that this particular pattern will trigger you to do something because it's involving three other pieces of information. Now, under the two are two candlesticks that appear next to each other. And when these two types of candlesticks develop, they tell you something about the market. Like bullish engulfing and bearish engulfing tell you the market is about to flip over. Means the market was moving up, and then you get an engulfing candle that of the opposite color that fully engulfed the previous candle. That shows you a big shift from buyers to sellers. Then we get to the more complex candlestick patterns that are made up of three candles. Three candles together forming a repeated pattern are fairly reliable, but they're hard to see. So we have morning stars and evening stars. We have three white soldiers, three black crows. Those are the ones I told you about, remember, reds and greens? We have three inside up and three inside down. So on that handout I gave you, it's going to show you the 16 most important candlestick patterns. You should understand. You don't need to memorize them. You should be able to, if they pop up or if you see them, you should be able to catch them at a glance. And as I mentioned, bullish and bearish engulfing are probably the most talked about patterns you'll see out there. Now, once you've gone through all of this, we talked about the charts, we talked about charting, we talked about patterns. You're probably sitting there saying, wow, this is way too much stuff. You're saying, stop it. I'm too confused with all these funny names and shapes and can't remember any of these things. And you're right. Okay. Because you have to get into the battlefield of trading. You have to actually be trading it. And believe me, I don't sit here all day. I'm trading all day from a candlestick chart. I'm hardly ever looking at candlestick patterns. But the chart, first of all, we go to the word technical analysis, which I'm sure you've all heard or know. Technical analysis could really be renamed chart analysis, because technical analysis is anything and everything that appears on a chart. And a chart is a graphical depiction of what price is doing. And price never lies. So a candlestick chart itself, without analyzing the candlesticks, is a great tool to understand what price is trying to tell you. And as a trader, price action trading is the most important part of trading. The rest of it are filters. The rest of it are alerts. The rest of it are other parts of trading. But if you think about each candle on a candlestick chart, it's a reflection of the market sentiment. It's not just the standard patterns, but with a clean observation, you can master the art of trading by looking at the charts without ever remembering the names of all those patterns. So what you always want to do is you want to look at your chart. Then you want to look at or try to read what price is trying to tell you. You also want to see where your support and resistance levels and how each candle is reacting to the most current support and resistance, as well as trend lines. And you should be able to look at a chart, because remember, you can only trade here moving forward. But to get here, you can't forget about what's happened in the last 10 or 12 hours. You have to understand what is going on here, and you have to be able to tell a story. You have to be able to read price. Okay, so here we're reading price without any technical indicators, without any candlestick patterns, by simply having our support and resistance, looking at our trend lines, and reading what price is trying to tell us with the body of the candles and the size of the wicks and price action. So even though the possibilities of here of an upward breakout, a breakout cannot be ignored, but a bearish side is equally as strong, especially because this side movement takes place in a downtrend. Okay, so we need to read what this chart is telling us. Each candle on a chart reflects the market sentiment. So what is the chart trying to tell us? And it's important to always be looking at the length of the body and the length of the wicks. Because if I told you that Google had traded at 141 and then closed that period at 142, or it went as high as 142 in that session, do you really clear that in that 1 hour it closed at 141.32? I'm more concerned with where it pushed up to. Are the bulls pushing it up higher and higher? So each one of these bodies and each one of these sets of wicks can tell us something. So there are many ways to trade with Japanese candlesticks, but it's best in combination with indicators such as pivot points and support and resistance. Japanese candlesticks or candlestick charts should just be your charting method. Now, candlestick patterns along with chart patterns could predict outcomes as they reveal the will of the crowd. Now, for instance, when I teach my triangle trading strategy, it is using a candlestick to break out of the triangle and the wick of the candlestick to determine the entry point for that trade. So I'm using a candlestick, but I'm also using a chart pattern such as a triangle. And it must be right above its most recent resistance level. So we're using support and resistance, we're using chart patterns, and we're just using the movement of the candlestick as opposed to interpreting whether it's a pattern and what that pattern is. Because perfect patterns rarely appear in the modern market environment. So learn to execute comfortably in a debris-filled landscape. Understand how to correctly interpret utilizing Japanese candlestick patterns will negate your decision making at murky waters. It's the trader's responsibility to formulate tactics that capitalize on the setup if it unfolds and protecting the trading account if it fails. Many traders who are following candlestick charting are at a distinct advantage. They realize, and this is when the candlesticks, especially the wicks, can help you determine where to place your buy and sell, where to put your stop loss and take profit. They'll help you determine where to enter the market, because trading is not just about a decision to buy or sell. At what price am I willing to enter the market? Where will I set my target? Where do I have to set my stop loss? Okay. All of those are important factors, and a candlestick chart will help you see where the last swing low was that you should have used to set your stop loss, where your high might have been your swing high to set your profit. to set your profit target, because you need your stop loss and your target to calculate your risk reward ratio to see even if you can afford to make the trade. So whatever trading timescale you work on, candlestick can be an incredibly powerful trading tool to help us to judge what's coming at us from the right of our trading screens. Because remember, we can only trade to the right. Now, in this webinar, we just scratched the surface, and that's why we call it the ABCs, the introduction, the basics, because we're just getting you to think about things. You're not going to become a candlestick trader for a long time, but you can start using candlesticks to start understanding what you're looking at. Candlesticks can be a powerful trading tool, but they are not best used in isolation. Combine them with simple pieces of technical analysis, and they will likely give you a clear signal that the market is ripe for you to open your trade or close out a position. Using them alone, you may find you are too close to the price picture to see what's really going on. So join us, please, for our more advanced candlestick classes. We have candlestick price action interpretation. We have our classes on candlestick strategies. We have all types of classes. And if you want to learn more about candlesticks, just go to www.ovexo and click over on their education center or ask their financial analyst, and they'll be glad to give you answers to your questions. So thank you very much for joining us this evening. Have a great trading week and best wishes to you in your future trading. Bye now.